What's going on, everyone? So I'm gonna come back at y'all with another stock today. And before I get into that, what stock am I gonna look at? Let's talk about what's my requirement for the stock. Number one, they are required to pay a dividend because I want to get a return on my investment now. Number two, they have to be financially stable. And number three, they have to be a good growth stock. Now, what stock am I going to be talking about today? Today we'll be talking about Broadcom. So the reason why I'm looking at Broadcom is it's an AI infrastructure, which I think is going to be a very big thing in the next few years. So I've been looking to diversify, and they look like they do have a bunch of switches and other optical and items that they do. So if you don't know what Broadcom is, they're enabling AI. So some of the products, they have wire connection, optical connection, mainframe. So they are making items geared towards AI to help support it. And to be honest, if they're gonna have to redo the infrastructure to do AI. So I see it as a good opportunity to get into them. And they are in a lot of different solutions for AI. So this is a connection that helps it. Now, I can go more into detail about it, but you should do your due diligence. I looked into this company and they're a decent company. So let's look at Broadcom. So Broadcom, they pay a dividend of 0.99%, not a very high dividend yield, but they do pay dividends, so it does meet my first requirement. And if I check out how have they been doing year to date, they grew about 2.42% year to date. And in the last year, they over the year is 107%, which is a very good growth. If we look at the 3 year, they're at 345%. And if we look at the 5 year, they're at 668%. So the growth opportunity looks very good with this company. So let's look at the finance real quick and see if it matches up with it. So they grew from 17 billion in 2017 to 51 billion in 2024. So they've been having pretty good growth, and it looks like they are doing pretty well. Now, let's look at what the gross margin is going to be at. The gross margin looks like they stay above 50% with the new gross margin right now around 63%, which is a very good gross margin. And this year, net profit is only 11.96%, with the previous years around 39, 34. So they have a very good gross profit or net profit range. So they profit pretty good. So they do meet my financial stability because they have not hit a negative year. They have been in a good gross margin, and they have a very good growth based off the projection. Now, let's look at the company details, see if any insider trading. It looks like everyone in their company sells, and it might be for many reasons, but it doesn't really bother me as much. But it does look like they get paid in stocks and they sell it as soon as they get it, which is not a bad thing. But you do need to pay attention to that. They are based in California and they sell their stocks. Looks like they sell their stocks due to for tax reasons in December, but they do get granted a lot of stocks. And it mainly looks like they sold at the end of the year. But it's not uncommon for companies to sell stock. And I would worry about it, but the growth of the company is going up and it's not really hurting them. So with this being an AI company, this will help me diversify my portfolio. So let's see what AI Insight tells us. The earning is 6 out of 6. That's great. The growth is 5 out of 6. So AI saying it's a pretty good growth. The performance is 6 out of 6. The health of the company is 2 out of 6. That could be a little concerning. And valuation is 1 out of 6. They think it's being overpriced. Now, underperform for short-term obligation, which makes sense. P multiple above peer average. Okay. So I'm just looking at what some of the complaints are. Now, I am looking for long-term stock. This is not short-term. That is why I am not worried about year to date. So even if I hold this for a year and if it only goes up 2.42%, I am fine with that because when I look at the 1 year, I have a chance to make 107%. The risk seems like it's worth it for me on that. Now, when I look at the 5 year, it grew 668% with a pretty steady increase. Now, will it continue this? I don't know. But even if it starts doing 14, 25% a year, that is still pretty good growth for a dividend paying stock. So let's see what the analyst says. The analyst says it's a strong buy. So with the analyst saying it's a strong buy, I think it's a strong buy. I will probably add this to my portfolio. Now, how much I will add in it, since this is a more riskier stock, I will probably add only $500 to $1,000 into it right now and see what it does over the next year or two. But this is definitely a stock I will purchase and add to my portfolio. Now, should you add this to your portfolio if you're looking at short term? No, this is not a very good short term stock. I believe it's too risky for you because short term, the gain is only 2.42% year to date. So if we compare it to last year exactly today, they only grew 2.42%. So it doesn't really have a good growth for short term. But long term, it has a pretty good return. So I am shooting for the long term on this. Also, if you're looking for a dividend to pay a stock or dividend paying stock, this is not a really good one if you're looking to have a higher paying dividend. So it only pays 0.99%, which is pretty low for a dividend paying stock if you're looking for this as an income. If you're looking for this as an income, you're looking for about 2.5, 3%, so you can get a decent income from your dividend with a good dividend growth. Now, financially, this company is very stable, so you should purchase this stock if you're looking for long-term investment. If you're only looking for short-term, this is not for you. But since I'm looking at a portfolio to build for 3 to 5 years, this is perfectly looks well in my portfolio. Now, like I said, this is a more riskier one to add to my portfolio due to the financial being good. I know they're not going to go bankrupt and their debt to equal or equity is changing. You can see that numbers will change on it. So will it do very well in the future? No one can really see the future, but I'm checking all the news on it right now. It doesn't look like there's any bad news. Looks like it's going to be bullish for next year or two. And this should be added to my portfolio if I'm looking for a good growth dividend paying stock. I do not focus on the dividend part. I focus on the growth part just because I want to capitalize on the growth to help my net worth increase, not worry about the payments. So please like and subscribe to my video. This is my opinion on Broadcom Inc. AVGO is the ticker symbol. Now,